Hello, everybody. Joe Malone coming to you live on Dallas Trading Floor. It is a, uh, it is, I think it's, yeah, it's Wednesday. God, I forgot what day it was. The market is bounced up nicely today, and it looks like we're getting a little bit of a dead cat bounce. S&P was up. Basically, the situation in the market has been pretty dire. I mean, we have had many days here of down market. As a matter of fact, this is the worst 100-day trading session since 1970. 7 weeks down, and it does look like we've got a little bit of a bounce. I do think this is temporary. I don't think this is long term, and so I think that this one is going to be not not something that we're going to see. We're going to be doing something. By the way, the person that wrote in on Amazon, I would refrain from buying any tech stocks right now. The only area of the market still that's doing well is oil and gas. Just not a good time to buy Amazon, even though we did have a bounce today. I think you'll be very disappointed if you do. And let's take a look at Amazon. I'll show you why this is the case. The market, we are still headed towards a recession in this country, and it is very likely that Amazon will go lower. Let me show you the chart for Amazon here, so you can take a look at it. Basically, if you zoom in on this is on the weekly chart. You can see it's moved down now. It did get a little bit of, well, didn't get a bounce today. It actually moved lower today. I suspect that we're going to see this thing move even lower, possibly. Amazon, I don't know if you have heard this, but they are trying now to close some of their warehouses, and it does look like a weak shopping for them. The American consumer just doesn't have any money, unfortunately. The only thing they're paying for really is food and gas. So I would not be a buyer of Amazon here. I think it's just too risky to do anything there. Now there is a stock though that I think that I have done well with, and that's CVX, that's Chevron. Pretty much everyone's heard of this one, and of course this is going up. Currently, it's off a little bit in the after hours, about 21 cents, but today up 175. If you look at the weekly chart on this one, it is still looking pretty good, and it's right at the buy point. By the way, you could actually add more of a position here to Chevron. I've made two buys on this one so far. I have about three full positions on Chevron, but we're right at the buy point. So the buy point 174.76, and right now we're at 174.80 after hours. This one is viable, and I do think we're going to move beyond that pivot. So we'll see what happens on this one. But if you're looking to add any exposure in this market, I don't really recommend having a whole lot of exposure in this market. This is one I think that you could possibly add here would be Chevron. Here's the only two things that I'm currently holding. Basically, I'm holding Chevron. It was up about 277 today, or about 1.6%. And I also own FLNG. This is a LNG stock, and I do own this one as well. So this one is also up, as you can see. Well, no, I'm sorry. It was up in the trading, and then it's down a little bit after hours, but it's getting support right at the 200-day line. This is a little less expensive stock, $27 stock. I just really, at this point, I don't recommend jumping into any of the techs right now. Let me just show you some damage that happened in the techs. You're probably familiar with the stock Snowflake. It went through earnings today, and it took an absolute dump. I'm going to show you the 15-minute chart here. Yeah, you can see it just kind of collapsed down here. Lots of selling going on. So even though we did have an update today, I'm not convinced. I think this is going to be relatively short-lived. That's my opinion. But I do think that we're going to go probably a little bit lower. Now, on my spreads here, I did close my Boeing spread today for a nice little $540 profit. That was over about a month. We went in that one. We're still up on Salesforce and Disney. Netflix, not so much. We're down a little bit today, 156. So I'm looking at this one, kind of seeing if we're going to go lower on this one. Let's take a look at the Netflix chart. In FLX is the symbol, of course, and we are kind of just kind of, we're kind of going a little bit sideways on this one. This is where I initiated the spread, and we've just kind of gone sideways. We still need it to move down really into about the 175, 170 area. So I don't know if this one is going to work here. So we will see. But we definitely have a little bit of time left on this one. So that might work as well. I also have a spread open here for raw. Well, no, we just closed the raw stores. We closed that yesterday for 455 profit. That was very nice. Now we do have we do have Dollar General coming up. They're going to be announcing earnings tomorrow. We have a bear put spread on that one, and so hopefully we're going to get the right kind of action here. We did put the bear put spread on. Let's show you there again. We did put the bear put spread on here. We pulled up a little bit, and then we'll see what happens. But we do have a relative strength line that is pointing downwards, and we do have earnings at the end of the day. So we will see what possibly is going to happen with Dollar General. Probably the proper short would have been to go with Dollar Tree, but I didn't do it that one. I did the Dollar General. This one has run up quite a bit in the last few years. I do think, though, it may easily pull down to this consolidation here at may pull down to this consolidation. And let's see exactly where that is. That is at 172. So that's where I think the support is for Dollar General. Currently we're at 195. So hopefully we will see we'll see what happens. We will see what happens there. All right, so let's get to the questions. Thanks for holding on. This is a question from Dan. Let's look at FDX. Let's look at FDX. If we can get something good there. All right, so let's go to the daily chart here. Currently, of course, we're in a downward trend. We are trading below that very critical 200-day moving average, and we do have the death cross on this one, as you can see. We're sort of rallying a little bit. We do have earnings in 29 days, so we've got about a month ready to go in this one. I would not. This one is likely to move lower. I mean, it's hard to believe it, but I think Federal Express is likely to move lower, and the reason I do, of course, is because of the situations that we have with many of their with many of the shippers. Online sales are starting to decelerate, and it does look like that's going to affect the shippers like Federal Express and UPS. So I would not be a buyer of this one long. We have a relative strength, and we have a downward trending relative strength line. It's just not worth buying in this sector of the market. Transport air freight 142 out of 197. I would not be in this one just because I think it's weak. Now Dollar Tree, DLTR. This one is probably an excellent short. I was buying this one prior, but this is probably the one I should have shorted instead of Dollar General. We'll see what happens. We did have a bounce here, and let's go to the daily chart. We had this gap down here. I was buying it here, and I sold my last piece of it at 173, and then of course, boom, it moved all the way down here to support at the 200-day moving average. It is up a little bit since then, but I don't know. I don't think this is going to reverse and go hard, even though the relative strength line is pointing up 89. That's not a bad relative strength line. So here's what I would probably do with this one: probably nothing, even though it does have earnings. So I'd wait for earnings. If I wasn't already in this one with a short, I'd be waiting for earnings on this one, just because I think that it's just going to be more difficult to get to the right play in this one. So I probably wouldn't be in either of these. Not a great answer, but I probably wouldn't be in either of them. All right, SoFi. Could we see $8? Let's look at SoFi. Yeah, SoFi, is one of the ones that high flyers, but again, this is at $6 here. I would not be a buyer of this either. Again, just a very weak finance consumer loans area, very, very weak, relative strength line pointing downwards. I just probably wouldn't be a buyer of this one just because of the way this is set up. I don't think this is a very, very good setup. I think the setups that you got to look for are in the oil and gas sectors if you want to go long. Now, one of the ones that I do kind of recommend taking a look at is the Spider Energy, or the XLE, and that's one I do want to show you. I do think that if you want to put your toe back into the market, this is the kind of stock that you want. You don't really want. I don't think you want the SoFi. Right now, in this inflationary market, the number one area of the market, of course, is oil, and this is one that you can buy right now. It's just above the pivot, pull back a little bit, but this is buyable right as we speak. This is the XLE, the Spider Select Energy. I do think this one is likely to go higher. Let's look at the weekly chart on this one. And yeah, it's almost at its all-time high, as you can see. I like this. Relative strength is 98. This means it's in the top 2% of all of the on all of the areas. And I just really think this one, if you're looking for something to buy long, this is, I think, what you got to look at. You got to look at these things like the XLE, because this is where you're going to get safety in the market. Right now, the market is just telling us that it is not a great place to buy. Right now it's just not a good place to buy in the market, and so we just have to be, exceedingly careful in what we're buying and when we're buying it. So really, right now, I would recommend buying something like the XLE. I think it's in a buy point. It's pretty much well set up, and if you want to go in and buy something long, right now I'm mostly in cash still, but obviously. Obviously I want to kind of put that out there. So I don't know if $8 is possible with SoFi, but I just think you need to stay out of it. Hey Jim, can you look at WES? Let's take a look at WES real quick and take a look at that to see kind of what is up with Western Midstream Partners. There's a blue dot special today. This was a good one. I was shaken out of this. I had a position in it at 26.50. And I put my stops in far too tight, and I was taken out at about 25, but I still think this is a good, this is a good one. This is definitely something that is buyable. And the reason it's buyable here, of course, is because it is in the top group. The oil and gas transport pipeline is not quite as good as the oil and gas exploration or integrated, but it's still pretty good. 12 out of 197. I definitely like this, and we have an upward trending relative strength line. So I definitely like this one. We're right below the pivot. You could buy it here. You could buy in this area. I wouldn't buy more than about a half a position though, but this is definitely viable, and it's a good stock. As you can see, it's very strong relative to the other stocks out there. All right, let's take a look at some of the other ones. Please look at Spider. Please look at Spider. Okay, we're going to take a look at the Spider. And of course, this is the S&P 500. Trades under SPY, SPY. And this is an ETF that covers the entire S&P 500. Now, here's the thing about this. I'm going to start first of all with the weekly chart on the Spider. We are still in a downward trend. It's probably never a good idea to buy when a stock is in a downward trend or an ETF. And unfortunately, as much as I like the Spider, it's in a downward trend. So I could not recommend the Spider here. It's off a little bit, and after it was up today, but one day up does not make a stock. So I would not buy the Spider, but I would look at the XLE, which is an upward trend. You just don't want to buy a stock in a downward trend. You can see this one is an upward trend. So I don't think you want to buy the Spider. I think you want to buy the XLE. Just my humble opinion here, but I just don't think that the Spider will work for you. So I don't think it's very, very good. You have a little feedback on audio. Sorry about that. Let's see if I can see if I can change that. If I can. Oh wait, I suppose it's it. I don't know if I can change that. Let me see if I can. Again, I have a lot of trouble broadcasting from TikTok because I really just have to show the screen, and sometimes that doesn't work. So let me see if I can fix my audio here. Let's see if I can do that. Okay, I should have okay. Turn speakers. All right, so this should hopefully that'll improve the audio there a little bit. Yeah, hopefully that should improve the audio. So hopefully that works for you. So sorry about the feedback there. Trying to get everything correct here. All right, so let's look at Nvidia. Nvidia may be a short. I just think there's been a lot of pain in the semiconductor area, of course, and I don't think it's ending. I mean, I tried to trade this in the early part of the, in the early, several months ago, and I really like this stock, but we are in a downward trend on this, and it's just, I don't think it's worth wasting your time. We had the death cross happen here. Yes, it may be rallying a little bit, but I think this one actually may be shortable. I know that sounds strange. I'm not going to be shorting it. They had great earnings here, but there's a downward trend here. I wouldn't touch this one right now. Just doesn't work. This is, I mean, I know this is, I keep repeating this over and over again, but don't look for stocks in the tech right now. They're going to go lower because because if interest rates go up, tech stocks are going to go lower. Now, oil and gas and utilities, different story. This is the contract driller. This one actually looks fairly decent, and I like this one. It's not really at a buy point, but it was at a buy point at 1127. So it's a little bit extended here, but this is the kind of things you want to be looking for. Not Nvidia long, but oil and gas. So definitely this could be a good one. It's in a very good area, the oil and gas drilling area, but I think you might want to look for something that's a little stronger, a little bigger company, something like a Schlumberger or something like that. That would be my my take on it. That would be basically my take on it. All right, what do you think of IWM? Still up decently on my put spread. Good for you. But bounced strong this week. Yeah. Let's look at IWM here. And I'm glad you're using put spreads because they are safer. They're definitely a safer way to go. Is this a bull put or a bear put spread? I can't tell. I do think that we're going to continue the we're going to continue a movement down here. So if you're, I would close this if you are in a bear put in a bull put spread. I would keep it open if you're in a bear put spread. Just my humble opinion there. That's what I would do there. If you were writing puts, how far out of the money would you feel comfortable to not get put upon buyback stock? Is there a rule you follow? Yes, I do. I use a number of calculators. I typically like to be only about 5% above. But this is a topic of a very long discussion because this one is the ultimate. It depends, and I agree with you on this one. You will not get put on if you're writing naked puts. You can get put upon. Okay, so this is one of the reasons I don't write naked. Typically, don't write naked puts. Okay, because you can get put to if you have a naked put. But if you have a put spread, that lower put, if it's a bear put spread, will take care of it. So if you have a spread, you won't get put to. So this is another reason why I prefer, instead of just buying puts. Now I know a lot of people, that's really all they know how to do. That's really what they want. They just buy puts. But I recommend getting into spreads, and the reason is because you can't get put to on a spread. If you have a spread, you won't get put to. So that's kind of my take on it. All right, let's take a look here at Tesla. Okay, Tesla has been hurt. I wouldn't, again, I'm just totally out of tech stocks right now. It did look like it has a little bit of a bounce at the bottom of the consolidation. Let's see where that consolidation was. There is the bottom of the consolidation is 620. Actually, and it did bounce at 620. That's very interesting. It bounced right at 620. We will see if it can hold 620. Then it might reverse. But right now, it's in a downward trend. So, here's my take on Tesla. I think that you just got to wait on this thing. I think it's going to go lower. I think it could go as low as about 540 in that range. Why? Because we have overhead resistance. And what do I mean by that? Well, many people bought when the stock was up here. As it rallies on the way down, that's when they're going to sell it because they're going to try to get out of the position. They're going to take the loss. So there's an awful lot of overhead supply right now for Tesla, and that's going to make it difficult to trade because it's not going to move up well. It's going to move down, and then until this overhead supply is taken out, I just think you got to wait. I think you just have to wait. There's not a good entry point right now for Tesla. You just got to wait for it to go lower. It's going to move lower. Tesla probably is probably going to get supported about 540. So I would wait on this one. No entry point for Tesla right now. All right, interest rates going up. And that's what it's going to mean. I mean the reason I don't recommend going long on practically anything but oil right now is because, and it's just a fact. As the interest rates go up, you're going to see tech do worse and worse. Why? Because the interest rates affect it, and basically what they're trying to do is because this country has so much debt. They need to get people to buy the debt. Now, the only way that they can do that is to raise the interest rates. If they do not do this, they will get even worse inflation. So, at least for right now, the market has a downward bias. So, basically, it's not a good market to be long unless it's in a sector that's moving higher. And the one sector that's moving higher is the oil and gas. Why? Because inflation. We're paying much more for oil. Gasoline prices have doubled. That's what people are spending their money on. They're not spending their money on anything else. They're spending on rent, food, and gasoline. That's about it. And it's true, everybody is going to have a solar car and all that stuff. But right now, you just don't want to be buying those tech stocks. Why? Because most of them are going to go lower in this interest rate environment, especially, and as good a company as Tesla is. Now, Tesla, I love Tesla. It really helped my portfolio, but I'm currently not in it at all. Nvidia had a decent earnings and great, but I believe it missed EPS at large. Yeah. Problems with China had, absolutely, you're right, Lewis. I totally agree with you on Nvidia. Here's the problem that Nvidia has. I don't know if you saw this, and as a matter of fact, I should have brought this one up. But Texas Instruments is building a new fab in a place called Sherman, Texas. They're going to be breaking ground for it. The problem that many of these chip companies have, like Nvidia, is they don't make their own chips. Okay, now for many years that was a strategic advantage. Everybody had their chips made at TSMC, but right now, TSMC is in Taiwan, and it's going to be threatened by China, unfortunately. And so many of these companies that depend on the fabrication of their chips in Taiwan are going to have trouble, and this is an existential threat to most of the companies. Now, not all companies that make chips have this issue. Samsung does not. Obviously, they make their own chips. Intel makes its own chips. TI makes its own chips. If you're going to be in the chip sector, I think you just really got to look at the chips that have the foundries. Let's look at Texan, TXN. This is TI, Texas Instruments. And this company is below, right now I wouldn't buy this company because it's trading below the 200-day moving average, but the downtrend in a company like this is going to be less severe
than in a company like Nvidia, because they absolutely make their own stuff. Now, let's take a look. I want to look at Intel, INTC. This is Intel, and this has just been hammered. Yeah, it's still in a downward trend. Almost all these chip companies are in a downward trend. It's just not where you want to be. You want to be buying stuff that's going up, not down. It's hard because you definitely, I would so much want to be trading in the tech space, but the tech space is not the place to be right now. The place to be in the market is oil and gas. Now let's, if you look at an Intel like this, and it's headed south. But then you go over to, if we go over to some of the strong sectors in the market, and let's take a look at. Okay, let me see here. These are the strongest sectors in the market currently. Are the oil and gas. So let's go to ranking. Let's look at the industry group rank. And this is where the money is in the market. Number 1, coal. Number 2, oil and gas drilling. So let's look at some of the oil and gas integrated, because I think that offers the best size and safety in general. And this is where you want to start looking for potential buys if you want to go long, is in the oil and gas integrated area. And this is going to give us some options here. The relative strength of this group is 97. This means this is the top 3%. So let's look at the top stocks in this area. Of course, we've got ExxonMobil, EQT. Let's look at Let's look at Shell first and see Shell is just above the line. Shell is buyable right now. This is the kind of stock that you want to be buying long. Shell is doing quite well in that area. Now, also, let's take a look at some of the other ones. Marathon Oil, MRO. This is another one of the integrateds, and this one isn't quite as well set up. This, unfortunately, you can see I was buying it here. I sold out of this one, but you can see since January, this is where the strength has been. This is in Marathon Oil. I wouldn't recommend buying Marathon Oil here, just because it is it's just not set up correctly. The problem in this area is getting the right setups. It's not that easy to get setups. I think that Chevron is now above the buy point. Let me see. I believe it is. No, Chevron is still buyable. So if you want to get into an oil and gas stock, this one might work well for you. And this is Chevron. It's a very, everybody's heard of it. It's not very exciting, but it is doing quite well. This is a good place to buy Chevron based on this. So that's kind of what I'm recommending right now is, if you're going to go long, you want to kind of be oriented towards those stocks that are going to do the best and are moving higher. And right now, that's pretty much the oil and gas area. All right. Oh, IWM is a bear put spread. Okay, actually, Lewis, that's great. Yeah, on the IWM, I think you're very good with the bear put spread. I particularly like bear put spreads because as the stock, I think that unfortunately we're going to see more weakness in the Russell 2000, and that's what the IWM tracks. We're going to see more weakness here, and so depending on where you got into that spread, you're definitely right here. I do think that in the next 2 days we're going to see the IWM move lower. Why? And I'll show you this. My thesis. We're in a downward trend, but if you'll notice, the way the stock trades is it comes up and then it sort of will hit the 21-day moving average, and then it'll come back down, and then it'll hit the 21-day moving average and come back down. This is actually right here is a good place to short it. Why? Because again, it's come up to that 21-day moving average. It can't get over that, so it's continuing its movement down. Also, if you'll notice, this is the relative strength line here, which is this blue line, and you'll notice it's trending lower. Okay, it's trending lower. And why is that important? Well, if this is trending lower, that means the entire average is moving lower, as we can see. So basically, we did have a little bit of an uptick here on the relative strength today, but the overall trend is down. So I think you'll be fine Lewis. I think you'll be fine on your bear put spread. I think as long as you give it enough time, you're going to be doing well on that, because I think you're going to be doing well on that because you're going with the market. So I think that's very, very important. And by the way, everybody out there, the most important thing in these markets, these are very hard markets to trade, is that you want to be going with the trend. I think shorting the Russell 2000 is a very, very good idea. Now, the iShares Russell 2000 ETF is the IWM. So the way you short it, of course, is you're going to buy a higher put and then a lower put, and the spread typically will be 10 on that. That will be the amount of range that you can move on. So right now, a decent spread on this one probably is a 180, 175, or 170. So let me just see if we can put together a spread for everybody out there on the Okay, I think I have something now. Yeah, there we go. Okay, I lost my mic. Apologize for that. Let me see if I can get my camera back. There we go. Okay, I think I'm back now. Sorry about that. Had to go to the headset. For some reason, I have software issues with the built-in mic here. So I'm going to the headset, and I think you ought to be able to hear me better. Let me just take a look if that is working. I'm sorry about this. I always seem to have trouble. Yeah, this is a problem if you're ever using StreamYard. This is a problem with StreamYard. It does have these issues regarding audio. It for some reason. Well, anyways, okay. So let's see if we can do a spread on. Let's see if we can do a spread on Let's see if it. Okay. Just trying to see if I can get this audio back. Oh, come on. Oh. All right. Not letting me. Come on. All right. What I'm trying to do here is I'm trying to calculate a spread for I'm trying to get a spread for the IWM. Let's see if we can get a good short on that. Let's see if we can do that and bring this up. So here we go. So here's kind of okay. This is something called the options profit calculator here, and what this does is this allows us basically to sort of automatically look through a whole bunch of pairs, and what I'm going to do this with right now is the IWM. And we're going to first of all get the current price for the IWM here, and that's 178. So basically, what I'm looking to do, my expected price on the IWM is going to be about 175, and I'm going to say within basically within the month. So let's Let's see if we can give it till about the June 30th. I'm actually going to say it's going to move a little bit lower than that, about 172. All right, and what I'm going to look at here is I'm going to try to find a pair that's going to give us the best results. So what I'm doing here to find the spread is using this. This will actually go through quite a few different iterations. See if it can come up with, there we go. Okay, so now we have a number of options here that we can use. Now I like to do the debit spreads typically, and this one looks pretty good. This is a 176, 171 put spread basically, and let's kind of take a look at this one to see kind of what the heat map says on it. Yeah, this one looks pretty decent in terms of the P&L. We could potentially make $640 on this one for a risk of about 352. Now it would have to fall the IWM would have to fall 3% approximately for us to get the full benefit here. That's kind of the beginning here. So if we're looking at that, let's see if we can. Let's pull up the charts for. Let's pull up the chart for the IWM. See if it can fall about 3%. So what we're looking here was we're about 178. We're looking for it to fall basically to about here. Oops. To about that level, and I think that's definitely the case, because if we look at this carefully, we can see that there's some support right here at about 168. It's where it fell for below before. So I definitely think there's a very high likelihood that this spread will work because it is. I think the spread definitely will work because it would fall. It would basically just have to fall about 3%, which is not very, very much. So if we look at the, there we go. At this chart, you can see currently we're here. We're just right above 178. It would basically only take it to fall basically at about 174, 173, and then we would come into this profit zone here. So I definitely like this one. This one might be a good option for you if you want to do, if you want to do something with the with the put spread. And I definitely think that's a good idea based on what I'm seeing in the market. So thank you very much for that. All right, so let's see. Any convenience store tickers you suggest? Oh, okay, yeah, absolutely. Thank you for this, Charles. Appreciate it so very much. I actually like MUSA on the convenience stores. Now, in a downturn like we're in, unfortunately, convenience stores typically do very, very well. And this is one that I like a lot, believe it or not. It's called Murphy USA. It's essentially, it's an oil company, but they have gas stations with convenience stores. And this is trading quite well. The relative strength line 98 on this one, and it started to make its move up again here. We're not really we're in a kind of a consolidation. The pattern ranking hasn't picked it up, but we're trading right about at the 10-day line. I like that a lot because if you'll notice here, this has been trading right above that 10-day line, and this one looks like it's set up pretty well at 244.66. Let's see if we can kind of get an idea on the weekly chart here. By the way, if you look at this is really interesting, I think, in that I think this is very interesting in that you can see the strength in these convenience stores, and that is their sales have been moving up very nicely. Anytime you get a stock, especially in a down market like this, that can improve its sales 20% or better a quarter, that's one you want to look at. If you look at this since the 21st of January, so for the last 4 quarters, 67%, 62%, 67%, 45%. So you have sales that are going up, and you also have profits that are going up. Now, this is probably one of the only areas that I like. It's retail, super mini markets. These are convenience stores. This is 18 out of 197. I like this area. I like this area because it is it's recession resistant. Okay, it's recession resistant. Look at also it has a fairly good PE ratio, 13. So that's looking pretty good. The cash flow on this one strong, 24.54. So I definitely like, if you're interested in convenience stores, this one is one you might want to look at. MUSA is the symbol on it. I don't own it, but I've been looking at to buy it. All right, Walmart gas, exactly. This is one of the areas that I think is going to do well. Are these mini marts? Why? Because they have the gas, especially, and then you also have the you have the convenience store, and people just are gonna. That's what they're going to do. That's what they're going to do. They're going to go for those convenience store deals, and that's kind of just the way it is. That's just the way it is. Let's look at Snap. My opinion on Snap. Unfortunately, Snap has fallen tremendously, and there it is. Wow, look at that. Look at how far down that's moved. Unbelievable. And I don't think it's going to get any better for Snap anytime soon. Yeah, unfortunately, I just don't see any support here. I just don't see any support. We're at $14. This is a gap down now. It's gotten a little bit of a dead cat bounce, but the relative strength on this is 2. I mean, it's amazing. It was 83 back here in October, and now you're looking at it, and it is 14. This is just why you just don't want to be long on any of these internet stocks. Look at this, 181 out of 194, 97. This area of the market, this is in one of the lower areas. So if we're just following the heat map alone, we're not going to get anything good there, unfortunately. All right, let's take a look, Brian. This is one that I thought I was going to do better on. This is DKS, which is Dick's Sporting Goods. They missed big time, and then they had a bounce. I think that Dick's, and I didn't close the spread. I probably should have, but Dick's Sporting Goods, is probably, it's moved up tremendously, and I do think, though, this is a dead cat bounce. I hope I'm right on this, and I do think it's going to come down. I think it's come up to that 10-day line, and I think it's going to come down. Now, I probably shouldn't have, my timing on this probably was not correct. I have a short on this one. Basically, it has to move below 73. It's at 78, so I've got 5 to go down. I do think that this is a short cover, but I don't know. I think it came down way down here. There are all these shorts, and I think people had to cover on the shorts. That's what I think this is, but I could be wrong. I could be wrong on this. Let's take a look and see if there's any short interest. Yeah, short interest, 6.5 days. So the short interest, there's a lot of short interest on this one. So I think this was a short cover. That's my guess, that this was a short cover. We'll see. I haven't closed my spread on it. I still have it open, but I'm going to hold it. I do think it's going to go lower. Snap came out early and said that they wouldn't be, doing well in their earnings. Has received a little today. I wouldn't touch it here. Absolutely. Yeah, I agree with you, Lewis. I agree with you. It's not worth it. Just not worth it. Can I buy a full position in ERF? Let's see. ERF. And kind of take a look here. Yeah. Oil and gas. Yeah. You can buy. Yeah, absolutely. You can buy a full position in this. I would say absolutely yes on this. Just looking at this, I think yes is the answer. So I definitely think you can buy a full position here. I definitely think you can buy a full position here. This is a healthy looking stock, 98 relative strength, beautifully increasing sales here. The profits are off the chain. Cash flow is good. It's got an 11 PE ratio. It's in one of the best areas, Canadian oil and gas, 5 out of 197, one of the best areas. And if you look at it here, we are coming, and this is a reversal line here, by the way. What happened was it came down here, it's pulled above the reversal line. This is a great place to buy it. So thank you for bringing that to everybody's attention. This is a winner because if you'll notice, I had a reversal line in here. It came above that reversal line. That shows strength. You have a relative strength of 98, and this is moving upwards. Good buying, a nice buying bar there. 2 days in a row, above average, above average. This is a good stock. Yeah, you could definitely buy this one. Thank you for bringing that to everybody's attention. Really appreciate it. Symbol on that one is ERF. ERF. All right. Well, thank you, everybody. Thanks. And I'm sorry I had a little technical problems, but I'm going to get better with this eventually and get everybody on TikTok. Eventually, I'm going to be able to do a direct feed to TikTok, but right now, no, not so much. Thank you, everybody. Please smash the like button. I so appreciate everybody out there watching the show and trying to, I think this is a short-lived rally. I am absolutely convinced that we're going to have some more pain. So please like the show, and I will be back tomorrow at 5. So thank you very much, and happy trading.